recent deficits, in terms of current dollars, have been the largest ever, about 3 times greater than the previous highs. Temporarily setting aside the most recent deficits allows a comparison of the deficits and surpluses of the presidential administrations of the past century. The first large deficit of the 20th century occurred during World War I. In the 1930s, the government used deficit spending to stimulate the economy during the Great Depression. Large deficits were also incurred during World War II. During the first half of the 20th century, big deficits were usually the result of government reaction to an emergency. Once the emergency was over, the budget deficits were reduced. By the 1960s, budget deficits seemed to be the norm rather than an exception. There were deficits each of the 3 years of the Kennedy administration. These deficits are relative to the red line on the chart, which identifies the $5 billion level. The largest Kennedy administration deficit in 1962 was $7.1 billion. Deficits continued during the Johnson administration. Spending rose with the War on Poverty in 1964, and then after 1965 with increased spending on the war in Vietnam, necessitating the addition of another red line at the $25 billion level. After posting a rare surplus in spite of continued war spending, deficits again approached the $25 billion level during the Nixon administration. The end of U.S. involvement in Vietnam and new policies, such as a brief wage and price freeze, the discontinuation of the exchange of U.S. dollars for gold, increased tariffs, and the devaluation of the dollar contributed to reduced deficits in 1973 and 4. The Ford administration had to cope with the problems of economic recession and inflation, as well as a Democratic Congress that favored stimulus spending and tax cuts greater than the administration had requested. The result was larger deficits, surpassing the $50 billion level, and in 1974, approaching the $75 billion level. Deficits similar to those of the Ford administration continued during the Carter years, a period of high inflation and high unemployment. The policies of supply-side economics, commonly called Reaganomics, included sizable tax cuts which reduced government revenue. The Reagan administration also increased military spending, which offset reductions in social service expenditures. These policies helped pull the country out of an early 1980s recession and contributed to an economic revival, but resulted in deficits which were twice as large as previous records. Some deficits exceeded $200 billion, peaking in 1986 at $222.1 billion. Subsequent tax increases and economic growth led to greater revenue, but deficits of around $150 billion continued. Deficits increased again during the George Herbert Bush administration, rising from the $150 billion level to $290.3 billion in 1992. Deficits were reduced during the first 5 years of the Clinton administration, and surpluses were attained during the final 3 years of his presidency as the result in part of tight fiscal policies and a strong economy. The surpluses disappeared and deficits were again incurred during the George Walker Bush administration. As a result of tax cuts and increased domestic and military spending, deficits surpassed the $300 and $400 billion levels. After deficit reductions in 2005, 6, and 7, the deficit grew to the largest ever, $458.5 billion in 2008, as the economy headed into recession. Returning to the recent deficits, the transitional deficit of 2009 and the Obama administration deficits of 2010 and 11 all exceeded $1 trillion. In 2009, the deficit was $1.4 trillion. The Obama administration deficits of 2010 was $1.2 trillion, and in 2011, it was $1.3 trillion. These deficits were far greater than the previous record deficit, which was slightly less than $0.5 trillion. With the exception of the Clinton administration, deficits have been maintained or increased with each succeeding administration since the 1960s.